Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Wednesday, May the 28th, 2008. The headlines out of Switzerland this morning read, dollar rose broadly as oil prices fell, and rise in U.S. new home sales. The dollar rose broadly on Tuesday after oil prices fell, and a report showed an unexpected rise in U.S. new home sales in April. Boosting expectations, the economic slowdown is not as bad as feared. Meanwhile, data out of Europe raised concerns over the health of the Eurozone. Demand for the European currency started to slow on news that the French business confidence slumped to a 2.5-year low this month, while the forward-looking German GfK index pointed to an unexpected deterioration in consumer morale in June. The euro went lower after reports showed U.S. new home sales rose 3.3% in April to 526,000 annual rate, above market's expectation. In another report, U.S. consumer confidence plunged unexpectedly to a 16-year low, 57.2 versus 62.3 in May, amid rising gasoline costs and falling home prices. At the same time, inflation expectations rose to an all-time high of 7.7%. An ECB Governing Council member said recent data hints at lower Eurozone growth this year and next, but it's too soon to say inflation has peaked. Another ECB governing member, Axel Weber, also said on Tuesday the prospect of interest rate cuts by the ECB this year was wishful thinking. While an economic slowdown may be just beginning in the Eurozone, in the United States some investors hope the worst is over, and the Federal Reserve's steep 325 basis point interest rate cuts since September proved sufficient to provide the stimulus needed to reinvigorate the economy. Yesterday, the euro-dollar was down at 156.89. The dollar loonie rose for a fourth day as oil prices declined. It last traded up at 99.40. The dollar-yen gained to 104.24 as investors are taking more risk and borrowed the low-yielding yen to fund purchases of higher-yielding currencies. The Japanese yen fell against the euro and the sterling. The euro-yen was up to 163.52, while the pound-yen was up to 205.84. Crude oil dropped to $130 a barrel. The dollar was slightly weaker in the Asian session as a dip in crude prices offset concerns over the U.S. economy. The euro-dollar rallied off a 156.70 support, climbing to 157.30 in the late session trade. Overall, commodity currencies, especially the Aussie, which was in a very bullish tone, and carry trades held up in spite of paring back of risk appetite and energy prices. U.S. markets closed with gains on Tuesday after the long weekend, with the S&P 500 gaining 70 basis points and the Nasdaq gaining 150 basis points. The main reason for the rise was a sense of short-term oversold conditions, with crude prices coming down helping sentiment. Treasuries retreated after inflation fears and the equity buying led to price declines. New home sales in April were slightly ahead of forecast, also helping sentiment. Asian markets were lower this morning as Nike dropped 1.5%, the Hang Seng is down 0.3%, and the MSCI was lower by 0.8%. Commodity producers led declines, with the fall in crude prices impacting oil producers. Yesterday, the Fed's Yellen commented that the current level of monetary accommodations is appropriate and sufficient to promote a step up in moderate growth this year. This comment seems to cement the current belief that the Fed is done cutting rates, especially given the elevated price of crude and the rising price pressures. However, there are a few significant obstacles ahead which could shift the Fed's neutral bias, including the energy prices and changing consumption patterns. Weak consumer confidence, which fell more than expected to 57.2, and is reflective of levels witnessed in 91 and 02, illustrates erosion of current and future expectations. In the European session, markets will be watching the German GDP and the Eurozone current account. The second estimate of the GDP will confirm the first quarter's 1.5% increase. However, many of the factors which pushed the figure up are off and cannot be relied on to help next quarter. The market is expected to slip into deficit after the recent fall in the trade balance, But markets will discount this figure since the trade balance recently fell and the Eurozone is still in a stronger position than the UK or the US. That concludes our news for today. We hope you are finding this beneficial to your trading, and we thank you very much for viewing.